What is going on, YouTube? Welcome to our channel, Clover Trading here with myself, Kyle Williams, and Huddie to my right here. We've been hanging out in New York the last week or so, just trading and chilling, and we wanted to come do a video today about what we're dealing with in the current market environment, specifically the end of October, starting November, and then what that potentially looks like as we head into December, February, January, but obviously January 1st. So anyways, like the video, subscribe, and let's jump right in.
Yeah, it's no secret that winter is coming. We're here in New York City and the temperatures are dropping really fast.
Getting very cold.
The sunshine is going away, the 30s are coming out, and that is usually a good time for us as small cap traders to kind of buckle down and get ready for what is to come in the winter session. I'll let Kyle talk about the majority of what he expects and what is to be presented for, but just to give you guys a little nuance, a little understanding of how trader psychology works, just some background information. We said this back in our previous YouTube video that you could go watch. We filmed it in Palm Springs back in March, April, so it's probably a video around then. Specifically, what we expected in the summer trading, and what happens in summer is a lot of money kind of leaves the market, a lot of liquidity leaves the market. Reason being is because a lot of kids are on vacation, a lot of summer vacation, people with families are traveling, are taking that time off, July 4th, etc. And you just generally see less market participants in the summer because it's beautiful out. You want to be at the beach, you want to be in Europe, whatever it is. Winter comes around, you have the exact opposite effect where, even if the kids are on vacation, like, it's cold, it's winter, it's snow season. A lot of people stay inside, which also instigates more trading, more liquidity in the markets, just from a psychological perspective.
And in that video earlier on, I think it was May, early May is when we filmed it, April into May. We had talked about preparing for, what June looks like, July, August, September, really the summer to early fall months, because generally, how you said, people go on vacation, time is off. Again, if you follow the overall indexes, is always a funny saying, sell in May and go away, right? Just take time off. It's a very seasonal thing, and usually that time is a slower period. As we end October here and we go into November, this is I view this as the transition period from the slower, choppier fall or summer trading, and then slowly ease our way into what is winter trading, which is generally known as December, January, and February, which is usually the hottest kind of 3-month period or quarter, if you want to call it. In my personal experience, I've seen that in myself and a lot of traders. So as we're we're filming this November 1st here, we are, at least for me personally, I am dealing with that transition period where I'm still getting the choppiness and the struggles and roughness of summer and fall trading, but we're being given opportunities that are starting to show glimmer and glimpse of what the winter trading can look like. Again, if you trade in the middle of October, you saw TPST go from 24 cents to, I think, $11 in after hours. You saw sympathies follow TPST, OPGN, SECO. What was another one? We had two or three other ones, but all of them ran, right, BBTH, all of them ran anywhere from hundreds or to thousands of percent. But again, that the period was maybe a 3 to 4 day kind of thing. Very small. It didn't really go much further than that. And that was kind of the highlight of October, right? If you trade small cap.
We actually have another YouTube video linking exactly to those type of stocks that went 700 to 1,000%. So you can also watch that on our page.
There we go. And so that was the highlight of October. And the reason why it was a transition period is because, yes, they gave you that opportunity, but it was very short-lived. And so if you didn't really execute and kind of nail it perfectly right then and there, your October might not have been so fulfilling or filled with other opportunities throughout the month. Granted, everyone's strategy is different. Huddie actually had a really good October. Me, on the other hand, that was really the only area where a lot of action happened for me. And then the last 2 weeks of October, I've kind of just been taking smaller losses here and there because nothing has really worked for me that well. And on top of that, I was just telling Huddie before this video, most of my Novembers, historically speaking, from previous years, aren't that much better than my Octobers. Granted, every year's a new year. This year could totally be different for me, but I'm kind of going into November expecting the same kind of choppiness, transition, and difficulty, and then hopefully getting ready for the December, the January, and February, which also historically has been some of my biggest and best months. And we can talk about why that is, but that's generally how I view it.
So let's talk about some of the events that prelude some of this hotter market type activity. So in the winter, there are a couple events that are going to prelude some extreme activity. some of the more favorable times to be trading. Number one, you have holiday trading. So the type of days where around Thanksgiving, around Christmas, around New Year's, you're going to have half trading days, which generally kind of provide volatile moments. Still can be tricky to trade, but there's always this kind of nature of like, maybe you have like a Santa runner or, a turkey runner, some kind of stock that gets really hot in these moments of like illiquidity. I've always kind of find them hard-ish to trade because there is a little bit of a liquidity aspect there, but there are definitely some runners around the holiday time to be aware of. And then more importantly, what I think actually has a bigger effect on the stock market would be the tax harvesting portion of the year, December to January, where investors are actually taking losses in order to negate their tax returns. And that also provides good volatility in the markets.
And what that adds on though is that they have to take losses in December for the year to start for the tax year, the next tax year, right? And that leads to a lot of at least small cap stocks that we trade being beaten down tremendously in December. And then once around maybe mid to late January, this is typically known as the January effect, where a lot of stocks that maybe people sold will then immediately start rebuying because they let that 30-day window pass, which is kind of what you need to kind of accept the loss on a tax basis. We're not tax advisors or tax CPAs, but that's generally the rule. Like you have to wait 30 days between when you sold it and bought it again to have it count. And so once that 30-day period for most people kind of passes, and anyone who wants to just rebuy the stock they sold, all these stocks that maybe gotten beaten down, again, it's not the exact science, but end up coming back. And it releases the volatility for us who like to trade those stocks. And again, we're just there for the meat of the move. We're just there for the volatility. We don't actually know how many people are selling or buying them for tax losses, right? But it's a general trend that people who don't trade like us are just doing on a more longer term basis that leads a little bit more of liquidity volatility into the kind of area that we participate in. So
what exactly am I doing to prepare for these months, for these potential months that could be the hottest trading days of the year and have systematically or cyclically been what have been our biggest months? I know for me, February is always a great month and December is always a great month. And I'm sure January is mixed in there, but February is always my biggest month.
I know what I mean.
And I think a lot of that is, again, we always say it in the Clover trading room. If you guys are not in the Clover trading room, definitely get in there. We talk about looking over our stats, our trading stats, and really understanding which patterns are performing the best in this environment. Where are our biggest winners? Where are our biggest losers? And how do we really batten down the hatches so that when we get into volatile months, when we get into a situation where there is more frequency of plays, what are we prioritizing? What is the first thing we really want to go after? And to specifically not be mentally exhausted going into that, because when you go from a slower period to a harder period, and all of a sudden you have a lot of plays to take action on, it can be hard to prioritize and discipline yourself to the right plays that are going to move the needle in your account, so to speak, or at least keep you as consistent as possible. And so right now is kind of that time to really be taking that due diligence on my part to say, okay, what has been working really well? Where are my losses contained? This is all the type of information that we share very publicly and transparently with the Clover trading room. All of our trades are documented, are public, are verified for everyone to kind of go back and see what we're trading, see the charts that we're trading, and our thought processes throughout the trade. For me right now, that's kind of what I'm doing, leading up into these months, specifically because these months are going to be different than what summer has been. Right. And that's important to know.
And the reason why Huddie mentions that is because a common question we get is like, when do you know it's coming hot? Like, yeah, we can tell you the general months, but once you're in those months, like how are you able to actually see the volatility or the opportunity present itself literally? And again, back to tracking, looking at how many trades are you taking per month? Like I know for me that my summer months, I'm taking maybe 30, 40 trades in those hotter months, whether I know it or not. I subconsciously, again, deliberately will maybe review my month and realize, oh my gosh, I took 60 trades, I took 70 trades, I almost doubled what I averagely take. And it's not because I'm forcing more trades, it's because there's just that much more opportunity, making it very simple and easy for me to just take those trades. And it turns out they ended up being double what's offered than in previous months, right? How many times are you winning? Usually my win rate is higher, right? Usually my gains are bigger than my losses, right? There's all these little things that you can look at. And if you're able to like really read those stats in real time, maybe daily or weekly, as it's actually happening, you're that much more able to pick up what's actually maybe further to occur the next week or the next month, and you'll know you're in that period, right? Again, same vice versa. We talked, I think we briefly mentioned it on the summer trading time, where it's like for going from then the or the winter trading to summer trading, it then goes back down to less trades. My win rate does get smaller, my losses do get slightly bigger, or my gains get slightly smaller, right? That risk to reward ratio does get hindered as we leave winter trading into summer trading. But again, that's many, many months down the line. that's kind of what we're looking at for now. Any last comments, questions, concerns?
Yeah, I mean, look, a lot of times your trading performance can show you the sentiment of the market, especially if you've been trading for a long time. You can get a really good gauge of like what the averages should be and where things can actually be a little bit off kilter. And it becomes very obvious in those moments when, one thing's working abnormally well or abnormally worse than others. So, my comment as always in almost every scenario is the trader that starts to diligently track their trades, the trader that starts to diligently understand their patterns, understand their risk reward ratios and their win ratios, that's the trader that can really prevail in a hot market when it comes. And the trader that is not prepared for that, the trader that is trading randomly and not understanding, again, everything I just said, where they're prevailing and where their losses are from, those are the traders that actually get hurt in a hot market. And the most important thing in hot markets, if it comes around, which we can be prepared for, is to just understand where you're at, right? Understand that this is a good time to not only be trading, but also learning. And in these markets, a lot of times those that are unprepared are losing and not learning the right lessons when there are actionable plays to be learning from. So just being really specific, really meticulous, really focused in these times, into the winter months. It's definitely a time to either grow your trading account or your knowledge account. It's not about nailing every single play. It's about really just understanding the minutia of every single play so that you're better prepared for maybe the next year or the next hot market, whenever it comes. These are the times to learn. Usually in the summer months are the times to, as Kyle said at the beginning of the video, sell in May, go away. There's not a lot of things to learn from. And it doesn't really matter about whether you're making your money or not, because trading stocks is this marathon, not a sprint. It's this long-term objective, right? And so every time you have the opportunity to learn from fully justifiable plays where there is liquidity, there is chart pattern, and the patterns are working, if you're not learning from those moments, then you're seriously, detrimenting yourself for the future when it comes around again.
Right on. And yet all this tracking that we're talking about, we go into much more depth and detail in some of the 4-leaf webinars that we do for subscribers. Again, if you want to be in there, we do offer a 7-day, $7 trial. It will be in the link in the description below. Go ahead and check us out and see if you like it, see if you don't. And if not, no worries. But we'd love to teach people how to trade, but hopefully do it as well as we do sometimes, and help prevent when we trade poorly, right? It happens to the best of us.
What's kind of cool is I've been devising this strategy over the past month for some of these big gappers that we've had at enormous frequency. And the Clover students get to see me go step by step from the statistics to optimizing risk reward and win rates. They get to see me go step by step as to how I create these patterns and optimize them, and then they get to take that information and use it for however they seem fit to use it for their style of trading or not, and that's the really beautiful thing about learning from someone who has been trading for 7, 8, 9 years, whatever it is at this point. It's all about taking stuff from someone who has the experience and then manipulating it so that it works for you or for whatever you see in the market, whatever edges that you can find. We're just really just glorified putting the food out there on the table for others to chew on, and it's up to them to chew on it however they feel situated to do so.
Beautiful. I couldn't agree more. Anyways, guys, thanks so much for watching the video. Make sure you like and subscribe. We do live streams on YouTube all the time, so stay tuned for those, and we will see you guys in the next video. Peace.